You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music can mean only one thing. It is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. It is time for TWIFO, This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you guys are binging so many programs, multiple shows a day, hitting you out there. Remember, if you like what you hear, keep those reviews coming. Wherever you get this show, could be your iTunes, could be, your Apple Podcasts, could be your Google Podcasts, YouTube, wherever you get our shows. Keep those reviews, those comments coming. We do love to hear from you guys. Keep those questions coming, too. You guys, at the end of the day, throw us some fun curveballs, which are always fun. We do love to hear from you guys out there. Let's see who we're hearing from on the old TWIFO program today. First, let's go out to the FTSE Russell hot seat, where we are joined once again by our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, sir.
Mark, it's a pleasure to be here this week. We've got a fantastic show lined up. Looking forward to getting right into it with you.
Let's get right into it. And you're right, we do have a great guest, because joining us in the CME Group hot seat, he's been a regular on some of our other programs on the network, but making his maiden voyage here on the ship that is TWIFO, none other than Mr. Matt Amberson, the founder over there at ORATS, a.k.a. the Oracle of New Hampshire, a.k.a. the sharp-dressed man, because you can see him dancing there if you have keen eyes in the background of the ZZ Top sharp-dressed man video. He has quite the long and sordid history. Let's break it all down. Mr. Matt, A, welcome to TWIFO, and B, for the listeners who maybe have only heard TWIFO, maybe haven't heard your other appearances, give them a quick rundown of what the heck it is you guys do at ORATS.
Well, it's an honor to be here. Had fun on the election night and talked to some TWIFO-ites. And my firm, ORATS, I started after market making on the SIBO, and we have proprietary calculations. We have very good data APIs. You can pull out all sorts of things, but we built a backtesting platform where you could go in and try your strategies before you actually trade them, and that's been quite popular. And then, of course, we have scanning to go with that, and some execution and as well. So it's great to be here, Mark, and looking forward to the show today.
It's going to be a good one. Let's get to it, but let's kick it off the way we always do with our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, let's do it. Movers and shakers, what is lighting it up over there at CME Group to the upside and to the downside, the top 5 in both directions? Matt, as our guest, holding down the CME hot seat this week, I shall allow you the pride of place. You can choose where we begin our journey this week, sir. To the light side or to the dark side?
I'm the light side, Mark, and I like those names up there. So let's start with the light side.
Let's go there. Don't tell Lucas. Their lawyers are quite aggressive, but we're just appropriating them from some other well-known franchise out there. I can see why you and Sean get along, both light side guys. Let's do it then. Top 5 to the upside. You can probably guess number 1. If not, we'll get there in a second. Number 5 to the upside, lumber, up 4.9%. It was number 3 in the same direction on our last show, which, as you recall, was 2 weeks ago. We were off for the Thanksgiving holiday here in the U.S. last week. So going back 2 weeks for the previous show numbers. Number 4, iron ore, up about 5.33%. Number 3, silver. I believe you have a question about silver. Maybe we'll get to it a little bit later. 6.33% on the upside this week. Numero dos, platinum, up 7.33%. The same exact position 2 weeks ago here on the light side. And then number 1 with a bullet this week. You probably guessed it. Yeah, it's Bitcoin. Just exploding, I think is a technical term out there. Up nearly 16%, 15.98% from our last show. It was number 1 in the same direction 2 weeks ago. So it's been a couple of weeks of just straight up rampage for all things Bitcoin. Stay tuned to our Crypto Rundown show every Monday if you like that stuff. We'll get into some of that here. We can focus on, of course, the futures and the options on the futures activity here. But yeah, Bitcoin has been exploding. It finally exceeded that 2017 high of around 19,800. Then it almost immediately gave it all back down to about, 3,000 handles or so intraday. Then it rallied back again on Monday, back up to those levels. It's just been insanity out there. Intraday vol, hour by hour vol, breaking over 100. It's been just a crazy town out there. So if you like a little vol, a little action, and a little bit of skew shifting, then Bitcoin has been the one to watch of late. Let's go to the dark side now, see what's lighting it up. Number 5 to the dark side here, soybean oil off 2.68%. It was number 4 to the upside last time, 2 weeks ago. Number 4, KC wheat off about 3.2%. Number 3, good old wheat itself, regular wheat, as we like to call it around here. Chicago wheat off 4.1%. Numero dos here, nat gas off about 10.5%. That's been swinging a lot as well. Number 2, exactly in the exact same position last show. Number 2 to the dark side last week as well. And number 1 to the dark side was the same last show as well. Class 3 milk this time just getting annihilated off 34.3%. So the dairy complex has been just insane, but we got a lot going on out here in all things equity volatility, so we have to start there.
It's time to explore the volatility swings, SKEW changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, let's do it. You guys know where to go if you want to play along with the home game. CMEgroup.com/TWIFO/TWIO, TWIO also works. If you go there, just go to the drop down at the top, pull down to the equities section, then pick your poison, whichever equity you like. We're going to start in Russell 2000 land. You guys can start wherever you like. And of course, those reports are working all the time. So you can go check small cap vol and SKEW at 2 a.m. if you like, whatever floats your boat. Coming into showtime, we got our old friend RVX, a.k.a. the VIX of the Russell 2000 at about a 28.5. That puts it down a little over 2, actually about 1.5 handles from last show, but not that far away from its recent high of about 31 and change. So small cap vol, still frothy, still elevated. Compare that to large cap vol, which is a.k.a. VIX, at about a 21.25. Coming into showtime, puts it down about 2 handles from our last show. VVIX, which is, of course, the vol of vol itself, that's at a 105. That's down about 10 handles. So vol is less volatile of late, which is kind of interesting. And, of course, the newest addition to the vol landscape, a.k.a. vol Q, a.k.a. the at-the-money vol of the NASDAQ 100, a little bit north of 24 coming into showtime. It puts it down, about almost 3 handles from our last show. So a lot of vol coming in on the NASDAQ side of the fence. So that large cap to small cap spread is at about a 7.25 right now from a vol perspective. That's a little bit wider than it was this time last show. And then we've got the traditional large cap to NASDAQ, so VIX to vol Q, which again is not quite apples to apples because vol Q at the money, VIX more of a skew as well. So a little bit different there, but still almost 3 points, about 2 3/4 points. So NASDAQ staying a little frothier, a little wider, 2 points wider actually than it was this time last show. A lot to unpack. Matt, as our guest, we'll start with you. The reason you are joining us today is because I know you spend a lot of time with your back testers doing a lot of different analysis and talking people through different strategies and how they perform. You do a lot of earnings analysis, which I know a lot of our listeners are really excited about every earnings cycle. But of late, it seems like your gaze has moved a little bit farther afield and perhaps to an index we know and love here on this program called the Russell 2000. What has drawn your eye to all things small cap these days, sir?
Well, it's drawn my eye for the last month or so. It's the amazing performance of the way out of the money calls. Now, what could be more exciting than that, Mark? We're talking like 5 delta. So if you could almost think about it as a 5% chance of getting to that strike. I looked at it just before coming on the show, and I thought it was going to be, maybe down. No, it's up even higher. So it's as high as we've ever seen it back to 2007, and today is even more. Now, these are for the components. What we do at ORATS is we look at all the components of the Russell. We give it a weighted average of all the SKEW, and so today the way out of the money calls divided by the at the money or the 75 delta is at levels that we've never seen. So way up there, the calls are trading at a much higher volatility than normal. Incidentally, that might have something to do with the VIX being higher in relation to some of the other relationships that we've seen. The VIX, as you commented, relies on SKEW, and these SKEWs of the way out of the money calls and puts, for that matter, I think are causing the VIX to be much higher than usual. Even though it's in contango, the end is at about a 25, whereas we're trading 20s, 19s in that level for the SPY. But anyway, back to the Russell. We've seen this call SKEW just pop, and it's pronounced in the just regular Russell options, but mostly it's in the components. There's someone out there really buying those out of the money calls, Mark.
That's fascinating. I'm curious, were you just routinely scanning the Russell 2000 and you saw this kind of leap to mind? You said, hey, I need to dig into this, or how did you first discover this, sir?
Well, what I've read about the SoftBank whale, and so I said, I saw that in the NASDAQ, and then the NASDAQ started to come back a little bit, and then I looked over to the Russell, and it looks like they've just moved over there, even though there's been some notes about the SoftBank getting out of the call buying, but someone's sure in there in the IWM component space, or I should say Russell component space, Mark.
Yeah, a lot to unpack there. Listeners, you guys check it out for yourselves. And Matt does a lot of his analysis through a lot of the ETPs and ETFs you guys like IWM as well. But you see a lot of that reflected in the same call SKEW and all the various SKEW analysis we do over there at cmegroup.com/TWIFO. You guys can crunch the numbers for yourself. Sean, I'm curious, what do you make of this? Obviously, this is an interesting analysis. Also, it's an interesting time to be talking all things small cap. I mean, even if you weren't on the show with us, Sean, I think we'd be focusing a lot on small caps today because pretty much wherever you look, everyone's talking small caps. Brian over there on OPR has been talking a lot about small caps a lot of late as well. Not a topic he usually discusses. Obviously, Matt said has popped up on his analysis. In fact, it's been a banner month over there for all things small caps. Just coming into showtime, the news breaking, Russell 2000 up more than 18%. In November, the best month in the history of the Russell 2000, going all the way back to 1984. So it's got to be just insanity over in your neck of the woods right now, Sean.
It's incredible. We always talk on the show of how small caps outperform in both directions when the market moves. But this move being triggered by what the economy and what the investor community is moving towards is a quicker U.S. recovery. And, Russell 2000 being that domestic index, you're going to see the various sectors. And I think we talk about the sectors a lot on the show, that, Russell 2000 is not so tech weighted as the strongest sector, but financials, industrials, materials, healthcare. All of these are the big drivers of small caps today, and have really just catapulted Russell 2000. They're calling it the November to Remember. I actually really like that in small caps. And we've always, for the first half of this year, we were talking about the resistance level of 1,600. What do you think of the Russell 2000 hitting 2,000? Like, we're not far.
We've been fixated on 1,600 almost, for how long? I can't keep track of how long it's been, Sean. And now you're right. 2000, we're at an 1854 coming into Showtime listeners. So it isn't that far ahead now, Sean.
Special. We'll do something special when the Russell 2000 hits 2,000. So yeah, I'm excited to see this, but it's fantastic. The liquidity in these products that trade on our partner exchanges, Cboe Global and CME Group, are just phenomenal. Whatever you really need to get done, both of our partner exchanges and the liquidity that's provided in the markets that are so tight and liquid, you can hedge, you can speculate, you can manage your risk, you can risk transfer, you can harvest volatility. All of that can be done in these products, and it's very exciting to see volumes increasing, open interest increasing. So just a fantastic job by our exchanges and for those trading these products. And I'm glad everyone in there is having a good experience.
Well, Matt, I know you do a lot of analysis over there at ORATS in terms of back testing, looking at what's effective right now, how some of these strategies have performed historically over time. Like I said, usually you focus on some of the larger equity names and indeed some of the larger indices, but now it seems like you're casting your gaze a little bit farther afield over there to small cap and perhaps looking at some of the opportunities between all things large cap like SPY, and a lot of people like to hang out in SPY or in the ES over there at CME. Pick your poison of S&P 500 flavor, as well as all things small cap. Any interesting results coming out there, sir, as you're running all these various back tests?
Right. So we do, hundreds of thousands of back tests. We have clients that come in and will say, hey, what's the best days to expiration or deltas over this period or that period, and how did it work overall? So we've done a lot on SPY, but we've been getting more requests on the Russell. And it's interesting. What we're seeing is that it's a better, the volatility and option premium in general is a better sell in the Russell. So the long hedging might not be as attractive, even though it's still pretty good, and it could definitely dampen volatility. I'm talking about just buying puts and protecting a portfolio that looks like the Russell, and perhaps even doing something against it, finding a shorter dated short put. We've seen good performance, actually better performance in the Russell than in S&P 500. So just to give a broad brush on this, finding some relationships such as a short-term short put versus a longer-term long put looks pretty good to us, and then just the fact that the volatility in the Russell might be a little bit over-realized more than the S&P, Mark.
Fascinating. We don't get a chance to break down comparisons all too often of a longer-term long and indeed a short put in Russell, let's say, versus S&P. So always fascinating to hear those comparisons out there. If you want to see for yourself what's lighting it up over there in all things small cap at CME, let's do it right now. By the way, set that drop down to equities and pull up the Russell 2000. You'll be off to the races. Like we mentioned, at about 1854, almost 1855, coming into showtime here in the Russell 2000. So about 150 points away from the 2000 level that Sean was just talking about. If you're wondering where the paper was this week, listeners, a pretty active week, as you might imagine. 38% of it coming on the DEES contract here. Let's go out there really quickly. DEES has a little over 2 weeks to go, 14.8 days to go. So perfectly within our frame of reference to analyze some vol and some SKEW. We mentioned before the RVX coming into showtime is at about 28.5. The actual DEES at the money vol a little bit lower than that, about 25, pretty much even. It's come in about a point over the course of this week. So a little bit of vol coming in there on the DEES contract. In terms of SKEW, we're seeing puts getting bid up pretty aggressively. Maybe it speaks back to what Matt was just talking about some of the performance of those puts out there, because the DEES puts are on fire. They were 8.6% rich to the at the money last week. This week, almost 13%, 12.8% rich to the at the money. So puts clearly getting bid up out here in DEES. Calls kind of staying the same. Calls 6.7% cheap last week. This week, 6.5% cheap. So not so much of a change there, but puts getting a lot of juice. Let's see what was lighting it up out here in DEES. Maybe that'll explain to us why the SKEW is moving the way it is. Actually, the big trade this week was the calls. It was the 1920 calls. So a strike, not a strike we would have heard too often, not too long back on our last show. We were a wee bit south of where we are now. So 1920 calls would have seemed even more outlandish. Now they're only about 70 handles away. So it doesn't seem that crazy anymore. Lighting it up mostly yesterday. And it seems like a lot of those were closing yesterday. So maybe some folks taking the 1920s off. Maybe they were overriding and decided, hey, getting a little bit spooky. Let's take those off. Either way, some closing paper on the 1920 call. Seems like the puts were 17 half puts. That were the most active puts out here going up. The lion's share of those yesterday, most of that opening. So it seems like some folks probably buying 17 half puts, which about 100 handles out of the money. Not quite as far out of the money as we traditionally see. A lot of the puts we see trading in the rut are usually far out of the money, and these are only a couple of weeks to go and about 100 handles out. So comparatively, not that far out, and clearly some folks buying some puts out there because those puts are getting a nice little lift. Let's look really quickly and see if any other aberrant paper out here lighting up our tape. Yeah, it seems like it's mostly in DEES. There was some front month 1835s that are going out pretty much tomorrow. So some action on those. We've blown through that strike, obviously, so not a huge surprise there. Sean, anything surprising you about this paper that's going up out here in all things small cap this week, and any other thoughts that are lighting up your tape as small caps continue to break records, sir, and make history?
You know, the paper is really interesting. But as I said, you're going to see all types of investing in trading and hedging taking place. It's been a really busy couple of weeks at FTSE Russell in regards to putting out some really good information in regards to the markets, the sectors of the markets, that what's driving small caps. The really nice piece I mentioned last week about the election, that came out, I think, the day we were on the show last week. And I'm going to shoot all this stuff over to you so you can put out all of these blogs and these notes on the markets out to the listeners so that they can actually take a really good look. There's a really good analysis of the big moves between 1984 and 2020, the big moves to the upside and to the downside. That's a really interesting blog by our Philip Lawler. And there's a couple of others by Philip that I'll be sending you as well to send out to the folks. But really fantastic information. And, you know, if you don't want to wait for Mark to send it out, it's at FTSERussell.com/blogs. There's some really interesting information about what's driving small caps and the indices, Russell 1000 and 2000, large caps and small caps. So please go to the website, take a look. We're having a webinar next week, and Philip Lawler, who's the author of a lot of this information, is going to be starring in as well to talk about the economy on a global basis and coming out of this pandemic. So and what it's going to look like from an investor market on a global basis. But really interesting stuff coming out of FTSE Russell these days. Go to the website, check it out. Mark, you're going to get all of this stuff so that you can you can blast it out to your listeners as well. But just a really interesting time in the marketplace to be watching these fantastic market moves.
It certainly is. And Matt, we could probably spend the rest of the show just talking all things crazy, equity, implied vol. We have a whole show that does that tomorrow, Volatility Views, noon Central, 1 p.m. Eastern, listeners. So stay tuned for that one tomorrow if you're super hardcore into all things equity, volatility. But before we roll off equities, Matt, anything else lighting up your tape, or perhaps any questions dancing around the old brain, sir?
Yeah, some of the things that are coming on my radar about the Russell. One is it's a pretty good time of the season for the Russell. November has traditionally been good for it. There's Davitt did a write-up that was pretty cool on the SIBO's blog about November really doing well, and December. So that might have something to do with it. I've been hearing things about the Treasuries. An interest rates going up and putting pressure on the NASDAQ a little bit. But I was wondering about the earnings duration. The longer earnings duration, the more you have to discount, and the future earnings, and the higher the interest rate, the worse it is for those types of stocks like NASDAQ stocks. So I don't know this, but I'm just curious about. I wonder about the earnings duration of the Russell, and I don't know if you fun to find out.
I think your dog likes the earnings duration there of the Russell there, Matt. But I don't know, Sean, is this a topic that comes up a lot? You're out there talking to a lot of institutional players, and indeed the market makers and the traders, and also the researchers who fixate on all things small cap day to day, even outside of when we're doing this show. Is this a topic that comes up a lot in their research or analysis or their trading, the comparative earnings duration of small cap versus, as Matt was just saying, some of the larger indices like NASDAQ and the S&P 500?
We watch earnings of the components of the Russell 2000 and their performances of the constituents, and then we go larger into the various sectors and their performances. But duration, that's a really interesting topic. I got to look into that. That's something that I'm going to take a look at, Matt. And thanks for bringing that up. Really interesting. I'll bring that up to our market research folks as well, because I haven't seen earnings duration in any of the comments as of late. But sounds like a really interesting topic and something we should be diving into.
So we'd like to have Matt on the show. He's always bringing some interesting data nuggets that perhaps we haven't considered before. By the way, before we roll out of equities, really quickly, I gave you that November is the best year ever. Let me just break down some of the other hot months so you can have a little bit of a frame of reference for comparison. November 2020, Russell 2000 up 18.4%. The next closest month, you have to go all the way back, listeners, to February of 2000. That may surprise some of you. Obviously not exactly an auspicious year for all things equity 2000. But in February, it was good for all things Russell 2000 to the tune of 16.5% to the upside. Then April of 2009, 15.5%. October of 2011, 15.1%. Then all the way back to October of 1982, listeners, 14.4% for your top five. There's a whole list. You can go check them out the rest for yourselves over there at FTSE Russell. But for the bottom of the top five, you got to go all the way back to October of 1982. So crazy times out there this month in all things small caps. Obviously the reason why it's dominating our discussion today. But we got to keep on rolling. Actually, I know, Mr. Matt, you have hung your hat in this category once or twice. You may have indeed perhaps even sold a house in this currency. So what do you say we take a quick stop into all things Bitcoin next, sir?
That sounds good, but I was just going to say in 1982, that's when I was making Sharp Dressed Man, Mark. So.
Yes, see, it all comes back. It's all cyclical at the end of the day. By the way, we're not lying about that, listeners. Check out our Twitter. We found it. We screen grabbed it for you. You can go look for yourselves and go watch that video. And there in the background, in a very snazzy purple suit, is the Oracle of New Hampshire himself, dancing away, the sharp-dressed man that he is. Of course, we do a whole show about all things crypto. Check it out every Monday after the option block there, or wherever you get this show on demand. You can get it there, of course, as well. It's been just, the technical term is just exploding out there of late. It's been interesting to watch how the options over there at CME have been keeping pace. Remember, they're a much larger contract. They're a 5X contract. You see a lot of the contracts going up on Deribit and others. They're much smaller. Notional value is smaller. The contract size, the multiplier on the CME is much larger. It's a 5X contract. So interesting stuff to keep an eye on. You guys can get this for yourselves. They've added a cryptocurrencies tab now to our TWIFO report. So just get on in there, pull up the TWIFO report, and go down to cryptocurrencies, and you'll see it. It's only one, just the Bitcoin. Remember, this is off of the Bitcoin reference rate that they use over there at CME, which aggregates multiple venues. I believe it's 5, maybe more, maybe 6 now, that are used to aggregate the prices. So it's not just one venue, because if you know anything about crypto, you know sometimes the spots are all over the place there. So aggregating multiple venues gets you a little bit more smooth data set. I'm sure Matt can appreciate that. Coming into Showtime, we saw Bitcoin 19,640. So just a bit away from that 20K level, listeners, which is just amazing. When we started that Crypto Rundown show, coming up on 2 years ago now, Bitcoin was trending in the wrong direction. It was threatening 3,000 to the downside. A lot of folks are saying, why are you bothering to do a Bitcoin and crypto show? That stuff's going the way of the dodo. And here we are a year and change later, and oh, how the worm has turned. Decent paper, not a ton out there, but again, this is a beefier contract out here. Looks like right now, leading the dance this week, listeners, are the Ds, which are going out in about 21 days. Ds, 25,000 calls are leading the dance out here. Most of the paper, followed by, looks like the 20,000s going up as well. Those strikes sound so outlandish, but they're not that far out of the money anymore. By the way, if you've been listening to our Crypto Rundown show, you know the number one size open interest strike right now across all of the crypto options landscape is the January 36,000 strike. Someone put up about 20,000 of those a couple of weeks ago, and they seemed absurd. Now, less so, just because that strike is far more in the foreground than it was not too long ago. You want to know what the SKEW is out there? Let's look really quickly. Let's go to D's. Let's see. The puts last week, 3.1% cheap. This week, puts are bid 5.6% rich to the at the money. The calls are where usually the action is in crypto. Bitcoin typically biased to the upside. And the SKEW was pretty heavily biased to the upside last week, 12.2% rich. This week, calls have come in 7.6%. Again, that's not entirely surprising. We have seen a pretty large shift. And remember, if you want to break down the shift in the SKEW versus the slide along the SKEW, they have a tool for that as well over there, cmegroup.com/TWIFO. Click on that shift and slide column. It'll break it all down. But we had a pretty demonstrable shift, which happens when you see a juicy vol, I think, to put it mildly. It's at a 78.3 right now. That's a pretty sizable amount of volatility for a large tradable asset to be able to maintain. And yet it is doing that out there in all things Bitcoin right now. Matt, I was only half joking about you selling a house in Bitcoin before, but you have transacted a few things in Bitcoin. Doesn't it seem like we've come light years from back when you and I were on that stage at that crypto event a couple of years ago here in Chicago, and Bitcoin was languishing in the wrong direction? Here we are now again, Matt, threatening 20,000 again. What do you say about all just the madness unfolding in that market again, sir?
Well, that's the story of Bitcoin for me. And I think on that panel, we were sitting next to someone from the CME, if I remember correctly. And we were asking, hey, when are you going to get options? When are you going to get futures? And so she was playing it close to the vest, but eventually they did come. Yeah, my experience with crypto goes way, way back. And I used to speak at these events that were populated by some Bitcoin activists, and they were going around spreading the word and trying to get everyone involved in it. And then it was in the hundreds, like 100. And, I'm trying to understand it. Way back then, there wasn't much on the internet or whatever. And the same arguments back then are, people talk about now, but it really looks like people are loosening up to it. Heck, even Federal Reserves and central banks are talking about digital currencies now. So it really has come a long way. And this, but what I always wonder about is all the volatility. I mean, if you're going to have a currency, you want very low volatility. But this is, we were seeing it maybe in the 40s, and now it's almost, it's nearing 100 realized volatility. So it's just, and you'll hear something like, a big whale from Mexico was buying, last week, and he got out, and that's why it went way down, but now it's way back. That's just a ton of volatility. I think it scares a lot of people away. But the acceptance of Bitcoin now, everyone knows what it is, and a lot of people are going out there buying it, and you've even seen some institutions getting in. So it is quite shocking, Mark, from the days when we were talking about it to now.
Yeah, just think about that for a second. That's a good point. Because people often discuss, we've discussed it on this show many times on the Crypto Rundown, where exactly does Bitcoin fall? What is it at the end of the day? We just talked about not too long ago on the show. We had some great listener questions, and you guys can run the numbers for yourselves, listeners, in those cross-asset correlation tools like I have done here to compare Bitcoin's correlation to the major indices, but also to FX if you think it's a currency, or to perhaps gold. That's the ongoing debate. Is Bitcoin digital gold, and see how it stacks up. And this year, spoiler alert, the correlations have probably been higher than you think for a supposedly uncorrelated asset. But think about that, Matt. If people think of it as Bitcoin is going to be effectively the digital reserve currency, perhaps someday in the future, imagine if the dollar had a nearly 100% implied volatility. Imagine the implications of that for trading, and just the value of what you hold in your wallet day to day fluctuating at a nearly 100% vol. That brings back perhaps scary notions of the old Weimar Republic rolling the old wheelbarrow full of Deutschmarks there to get the loaf of bread. Hopefully, we won't see, of course, that was inflation-driven, not quite a volatility thing. But still, you could see some analogies there historically. Interesting stuff. Keep an eye on the Bitcoin drop-down out there, because we have seen some whales start to lurk in the futures. Have been tearing it up out there at CME of late. So seems like size institutional players are coming to play, and coming to play aggressively out there in all things Bitcoin. You guys finally have a great way to parse it for yourselves. See the SKEW, the volume, the volatility, cmegroup.com/TWIFO. Click on the cryptocurrencies tab, and you're off to the races. So explosive, best ever month in small caps. I'll have to look, but probably one of the best ever months in the history of Bitcoin as well. Just an explosive month. So we're kind of 2 for 2, Matt, in terms of delivering the hot products that people want. But you're our guest. I'll allow you to choose where we go next. The entirety of the CME trading pantheon is your oyster, sir. Where should we hang our hat next?
Well, just let me say one more thing about Bitcoin. That you had a good point that comes to mind. If you're doing business in Bitcoin, and you're starting to put up a pretty good inventory of Bitcoin, you're going to want to hedge it, and it's going to be difficult to do that. You're going to have to be very nimble, especially with such a high realized volatility. So I think that's one of the considerations about looking at doing business in Bitcoin. But why don't we move to gold? How's that sound, Mark?
I think we could do that. Certainly an analogous conversation. A lot of folks like to talk gold and Bitcoin in the same sentence. A lot of people thinking what's been going on out there with the Fed just saying, the heck with inflation, driving a lot of the interest out there in things like Bitcoin. So certainly a related topic. You want to find it for yourselves, go to that drop down, go down to the metals, listeners, pull up the old gold, and you'll be off to the race. I said it before, I'll say it again. I like to choose a select all so I can see the entirety of what's been trading out there throughout the week. That could be perhaps overwhelming to some of you out there. So it loads up with a kind of a snapshot view. That's probably sufficient for most of your needs out there. Coming into Showtime Gold, not that far away. Gold and small caps, almost equidistant, Sean. 1844 for gold and about an 1854 for small caps. What do you say there, Sean? Is there some analysis to be done? The price of gold versus the price of the Russell 2000, sir? Is that on your research to-do list?
Yeah. We've been talking about correlations on this show as well. I wonder what the gold versus small cap correlation is. We can take a look at that. But very interesting to see the prices near each other. It's pretty interesting.
That old adage we all had it beat into our brains in our Econ 101 classes at college. When small caps trump gold and put your money in the mattresses, right? We all have heard that a million times out there, to make up my own adage out there for today. But yeah, 1844 coming into Showtime for gold. So obviously well off that 2000 level it hit not too long ago. out there. Let's see what's the most active contract out here this week. It is the Jan contract, just about exactly 30% of the paper. By the way, if you're wondering, about 194,000 contracts on the tape this week out there on the gold contract in CME land. So a pretty active contract. It's no Eurodollars or even the WTI right now, but pretty active on the metals front. Let's see. 1845 is where that Jan future is hanging out. So yeah, right about the same level. And let's see, where are we here? Yeah, vol-wise, we're talking about a little bit less vol than we're seeing in Bitcoin. So Bitcoin, we said about a 70-odd vol out there. It has threatened 100 intraday at certain moments. Gold vol, 16 3/4. So that's getting a little bit better when it comes down to your reserve-type currencies and reserve assets. You probably want a little bit vol level closer to that than perhaps Bitcoin. Even that's kind of high. You probably want a lot less, and they probably want something more approaching, like it's say a 10-year out there, at 3%. But 16 3/4% is where we're hanging our hat right now in the Jan contract. In gold, let's look at the SKEW out there. A little bit of action in the gold SKEW this week. Last week, the puts were 1.7% rich. This week, 3.7%. So 2 points coming in on the old puts, and the calls 1.5% rich. So last week, both the calls and the puts were rich, kind of equidistant. So about a little bit of a smile going on in gold land, which is always kind of fun. Gold SKEW moves all over the place. If you like to see evolution of a SKEW product, listeners, gold is a good place to hang your hat. This week, the calls have come in. They're about 0.5% rich, so coming about a full point there. So not quite a smile anymore. Now it's skewed back the way a traditional equity is. The puts have more premium than the calls. Let's see the most active contract out here this week. We're at about 1844 in that future. The 18.5 calls seem like they're leading the dance with about 4,500 going up. The lion's share seems like, let's see, when did they go up? They went up yesterday, or Tuesday, I should say. 2,200 on Tuesday, about 1,800 yesterday. Only 300 today, so a light day today on those at-the-money calls in Dees, followed by the 2,000. So now that's getting back to a strike a lot of people have fixated on of late. 2,300 trading on Tuesday. So maybe that's a similar amount to the 18.5, so maybe a bit of a vertical there. Maybe someone rolling down because the 2,000s were closing. So maybe someone rolling down from the 2,000 calls down to the 18.5. So that would certainly make some sense given what we've seen out there of late. But the almost exact even amount of paper on both those strikes that day, opening on the 18.5s, closing on the 2,000, seems like it is a bit of a roll. Total of about almost 4,000 going up. 1,300 trading again today with no other legs to it. So just straight up trading on the 2,000s today. So interesting stuff afoot. When we're talking gold, we like to go a little bit farther out to see what kind of funky strikes, because there's always something funky trading in gold option listing. This time looks like it's the Dees of 2021, 3,000 calls. Yeah, someone's always got an axe to grind on crazy upside here in gold. The gold bugs are a persistent bunch, to say the least. Those traded about almost 800 times this week. It's pretty active, such a far out of the money strike, and it's been trading evenly all week long. Usually if you see that strike, a crazy strike like that, 3,000, usually there's some other legs. Folks like to trade funky ratio upside flies in gold a lot. Not this week. It's just straight up 3,000s, Tuesday, Wednesday, and Thursday. Just 250 at a clip every day. So, yeah, interesting stuff afoot here in all things upside in gold. Now, Matt, I know you like to hang your hat on a lot of different equities out there, but you also probably watch some of the commodity ETPs, like probably SLV, maybe a little GLD as well. Like I said, gold's a fascinating thing to watch just from a SKEW perspective. If you don't watch anything else, gold's a good one to watch in terms of how it evolves week on week and month on month from a vol perspective. What are your thoughts on gold vol and the SKEW and anything else you're seeing out there this week, sir?
Yeah, like you're saying, Mark, people will come in and put these positions on and really move the SKEW around. And I have to turn all my equity signals on their head. It's almost the exact opposite.
Yeah, isn't it funny how the gold, because you look at it, you initially react with an equity mindset, like, oh, that means this. And you say, wait a minute, no. This is its own beast. You have to wipe your mind of all that.
Yeah, so like in July, end of July, right before the big rally, implied volatility started going up before a rally. We usually see the opposite in equities. Contango went into backwardation. Usually that's a bad sign for equities, but it was a very bullish sign for gold. And then, fast forward to August when it hit its high, then volatility started slipping. So did the price of gold. And contango started slipping. And then recently we've seen a little bit of a bump in volatility. And who knows? Maybe it's bottoming out a little bit. It's starting to look a bit better than neutral to me, just from those type of analyses and skews that I like to look at to give me a sense of where the price might be going, Mark.
Speaking of going places, your questions are going to take us in a lot of interesting directions, including one related to gold right now. So let's get to a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to your segment, the Futures Options Feedback segment. A lot of great questions to get to. We'll see how many of you guys we could squeeze in. I think this one came in on our last show from our regular listener, Tony. I'm not sure. He might still be in there. I haven't had a chance to check. Tony Weber asking about SLV, so silver. Says silver is not trending with gold, the dollar down. Is the reopening / risk on trade keeping the price of SLV down? Did we kill all the werewolves? And there is no demand. Obviously, he's been listening to the show here. Yeah, that's an interesting question. I'll have to make sure we save that for Uncle Mike on the option block as well, because I know he's a big SLV head. I know a lot of you guys like to get your metals exposure through GLD and SLV. Hard to blame you. Those are pretty good and well-run ETPs in terms of how they track the underlying, because they hold the physical. There's no nonsense roll yield risk with things like you see with like a VXX that tries to approximate VIX futures and does a pretty miserable job, or a lot of the other commodity ETPs out there that try to approximate some sort of futures basket and end up getting eroded to death. GLD and SLV don't have those problems, so I can see why a lot of you like to go that way. But you're right, silver has been an interesting one. We've been talking about it a lot here on the show, and then lately, not so much. So what's up with that? Let's look. We can pull up right now and check what's going on from an overall vol and skew perspective on the silver options. And you're going to see something analogous to what's going up in SLV. The skews and everything else will be pretty much the same. So let's do that right now. Go to that same place you saw gold, listeners, and just select one down to silver. Coming into showtime is at about 24.25 out there. Actually having a decent week this week here, Tony, up nearly 7%. So a little bit of a pop. Maybe the werewolves have been all killed and now it's back up. I don't know. But either way, getting a nice little pop here this week. The most active contract with about 43% of the paper is in Jan. By the way, if you're wondering gold versus silver from an options volume perspective, silver has about 27,000 contracts. Obviously a lot lighter than gold. And the number one, actually before we get to the number one trade, let's look at the vol out here. It's pretty juicy, actually, compared to what we were just talking about. Roughly, 16% for gold. Silver vol in Jan at a 35, almost a 36. And it's ticking up about 3 points this week. So silver vol is juicy. A lot of you like to look at your premium rights maybe in the metals. Maybe silver might be where you want to hang your hat all over gold out here. Let's see. Let's look at the skew really quickly. Last week, the puts 4% cheap. This week, unched. The puts are about 0.5% cheap. So the puts have come in. I should say have been bid up pretty much aggressively. The calls 7.1% rich, so obviously the bid was leaning towards the calls. This week that's come in a bit as well, down to about 5.5%. So the vol has come up, and the puts have been bid. The calls have come down. That's kind of interesting. Let's see what the most active contract out here. It was the 28 even calls. That's a surprising strike. I would have guessed something else, but it's at about 24.25 in the future, 28 even calls in Jan. Number one with the bullet. The big day actually today, almost 600 going up on the tape today. So obviously you don't have OI change for today's paper. The rest of the week's paper has been mostly opening. So opening on the 28 strike in Jan. That's probably not what I would have expected. 28 calls also active in February as well. So funky, interesting strikes here out there. I know you like to watch gold skew. Matt, do you ever watch silver skew, or perhaps a comparison between the two? And do you have anything to add here for our listener, Tony? Wants to know what's up. Did we kill all the werewolves? Who's driving SLV, sir?
Well, yeah, I mean, I have physical silver and gold, and then I like to trade the SLV and the GLD around that. So I definitely watch that. And again, it's come down as you mentioned, but the call skew of the way out of the money calls really blew up on the 1st of December, 2 days ago. And as silver popped a little bit, so I'm seeing that it is going to have a little life, and love Tony's comment. So let's give Tony some love with some silver rally coming up.
Yeah, there we go. I think he probably could use some. I think Uncle Mike would probably like a little bit of a SLV love. If for no other reason, he could finally do something in that 2-year collar he's been talking about for about 5 years. Seems like it's been endless with that 2-year collar with him. Let's go on out here. What we got? Mr. Unlimited also in the live chat. By the way, if you listen live, your comments tend to get bumped to the top of the list, listeners. So another added bonus of listening live. Mr. Unlimited, when we were talking about crypto, he said, "Oh yeah," because I was talking about the Weimar Republic and the barrel full of Deutschmarks there, wheelbarrow full. He said that's Venezuela right now. Lots of the currency is crypto. Yeah, when your reserve currency has that level of volatility, no bueno for the health of the economy. So something to bear in mind for all you crypto digital bulls out there who think Bitcoin can just take over. It's an interesting idea, and certainly inflation-wise, it may lend some credence to that, but a nearly 100 vol ain't going to help things out there. All right, let's go to Bellamy. Matt, this is another one that's up your alley here. Bellamy wants to know, in the past, you've cautioned listeners against trading options around earnings because it's mostly a crapshoot. Does the same advice apply to other types of event risk like crop reports and OPEC meetings? Thanks in advance. This is interesting. Obviously, maybe Matt, because this is your first appearance on TWIFO. Maybe let's start with the first part of this question. Obviously, you crunch a lot of the numbers for us over there at ORATS in terms of the earnings straddles and earnings volatility. Maybe let's give our TWIFO audience a quick synopsis of what he's talking about. Why do we always recommend against trading options around earnings, sir?
Well, options around earnings are, and especially just one or two. If you have a systematic approach and are doing quite a few, and you know what you're doing, maybe calendars instead. It's such a binary thing that happens at earnings. And what I always thought when I was a market maker on the floor was, people know a lot more than you do. And there are accountants out there, and no matter if you think it's a efficient market or not, someone knows something. And whenever we'd get burned, you know right before there's going to be a good earnings, they'd come out buying, and you knew you were going to get hurt. So, you have to be really careful where you can get your niche out there, where you know more than other people. And I'll answer the second part of the question. I mean, it's the same thing with OPEC meetings and crop reports. Sometimes those get leaked, and sometimes people do. Especially with all of the alternative data sets, they're really honing in on some of these things. So unless you have that edge, that's why we often caution against it. And then during, other times when it's anyone's ball game, that's a good place to get your niche where other people don't have the advantage over you, from these types of reports, Mark.
Yeah, I couldn't have said it better. All event risks at the end of the day are pretty much the same. They may play out a little bit differently, but at the end of the day, it's the same analogy. You have the vol building up, heading into the event. I've used the analogy many times of it's like a balloon. That balloon fills up with the vol, and then the event happens, and unless it's a surprise, usually that vol implodes, the balloon implodes, the balloon bursts, and there goes all the vol. You might say, well, that's obviously I should be writing it. But of course, as we've seen with earnings, and the analysis applies to other events as well, the few times that doesn't happen, you get that surprise. The moves can be pretty aggressive, and they're going to wipe out most, if not all, of the profits you're making from selling these things. So it truly is a crapshoot, particularly in some of the commodities. Think back to the old trading places and the FCOJ report. Someone's lurking there with the trench coat and the results in hand for the crop report. So if you're, especially in the commodity front, if you're not that well versed in what's going on out there, what's going on in the broad macro front when you're talking about OPEC, might be a good thing to stay away. But if you're using your usual strategies and doing a little bit of risk management and due diligence, you can get a little bit of extra premium for some of these things. You have to just be judicious with how you go about it and make sure all of your risk is mitigated. You're using spreads, not just outrights. And that's you should be pretty safe. But yeah, in general, they should play out fairly similarly there. Event risk is event risk. Doesn't matter what underlying you're trading it on. Or what was the listener's name? Bellamy. Let's go out with this one here, because a little bit of love here from our regular listener, Baiju. I guess he just loves all things CME. He says, "Hi, Mark. Hope all is well." Well, thank you, Baiju. All is well. He says, just wants to say CVOL. Says it's a great tool from the CME. CME coming out with this in 2020 is incredible. Hope to see them expand to more products soon. Still reading up on their methodology. Hope to come up with questions soon for the show. Well, thank you for that. Yeah, CVOL is interesting. He broke it all down very recently on the show with Derek Salmon over there from CME. So go back and check out that episode if you missed it. But I'll give you the quick version, listeners, is that if you're interested in trading volatility on the equity front, it's a good time to be alive. You have more options, pun intended, than ever before. Of course, you have your traditional players, your VIXs and all that fun stuff, and the VXXs and all the things that go on out there. But also, of course, NASDAQ and CME just launching VolQ. So now you have an at-the-money NASDAQ volatility product, and hopefully options coming soon sometime in 2021. And then now CME just getting into the game, as Baiju points out, with the CVOL, which are going to be implied vol indices. They're going to track pretty much effectively the entire range of the trading products at CME. They're starting off, I believe it was, with 6 FX currencies and then some of the treasury contracts there. So only starting off with a handful. They're going to expand that purview soon to equities and to everything else you guys like to trade out there, the metals and everything else. So, and those do incorporate the SKEW in a similar manner to all things VIX. So you got a whole breadth of options, again, pun intended, out there. If you want just straight up at the money, if you want SKEW, if you want small cap, if you want large cap, if you want FX, if you want a vol trading instrument, it's coming in the near future. Now, the CVOL is a little bit farther away. They're talking about getting all the indices disseminated for now. They're just close to close now. So you're not going to get intraday for a little while. You have to wait till the end of the year to get most of the products up, or I should say the indices disseminated on most of the products. But eventually, hopefully beyond that, we'll start seeing some tradable products on these in the near future. So I'm with you, Baiju. It is an exciting time to be looking at vol, to be trading vol, and to have a slew of products with which to do just that. All right. Unfortunately, that music means we've come to the end. Man, how an hour flies when we're talking all things TWIFO. But before we go, let's go back around the horn. Let's start with our guest. Matt, you did an able job in the hot seat for your first time here. So if folks are intrigued, they want to learn more, maybe they'll hit you up with a back test of their own over there at ORATS, sir. Where should they go? What should they do?
Yeah, I'm at Matt at ORATS, MATT at ORATS.com. Like you said, back testing, scanning, automatic trading, charting. That's where I get all this information, a lot of historical SKEW analysis, and also it's ORATS.com, ORATS.com, and come on over. A bunch of tools, a bunch of APIs, everything, Mark.
Lots of cool stuff. See that video of him dancing with ZZ Top, all that good stuff and more, ORATS.com. Also give him a follow on the old Twitters at OptionRats, all one word. It's a very memorable handle. You can't forget it. So all this data we're talking about here, SKEWs, Russell 2000, SKEW, you name it, he's tweeting that out throughout the week. So give him a follow over there at OptionRats as well. And Mr. Smith, before we go, sir, you kind of touched on it earlier in the show, but you guys have a lot of webinars, a lot of great data, a lot of great research coming out. If folks want to kick the tires on all of that, where should they go? What should they do, sir?
Well, first of all, pleasure being on the show again this week, Mark. Thanks for having me. Matt, a real pleasure to be on the show with you. It was fun on election night as well to be on that live broadcast with you, and always interesting stuff. I really enjoy listening to you talk about the markets, and most especially Russell, the small cap index of the U.S. It's near and dear to my heart, as you very well know. You want to reach me? It's Sean.Smith at LSEG.com. It's not FTSE Russell anymore. They've kind of changed our email addresses, but if you got my old one, it'll still get to me. And you're right, Mark. We have lots of blogs that are out there, and what we call idea blogs as well. One came out on November 25th in regards to the election. You can still bring that one up. There's a blog in regards to the big rally of November, the November to Remember blog as well by our Philip Lawler. Philip Lawler is our Managing Director and Head of Global Investment Research at FTSE Russell. And on December 9th, he's going to be putting on a webinar, and it's a global investment outlook for whether or not the vaccine optimism will trigger market drivers throughout the year of 2021. And we've already seen what the news has done to our markets so far. But as people start getting the vaccines and we start seeing these numbers, these frightening numbers drop and the world getting back into normality, it's going to be a really interesting year in terms of economic expansion and growth. And that's globally. That's not just the Russell 2000. That's globally. And Mark, Philip Lawler will be giving a fantastic webinar on December 9th. And to get all of that, you just need to go to FTSERussell.com/webinars, and you can register for it. It's on December 9th. It'll be really interesting. I'm sending the link to you so that you can blast it out to your listeners as well. So thanks again for having me on the show, Mark.
Happy to do it. Check it out for yourselves. You know where to go, FTSERussell.com. Give them a follow on the old Twitters as well. At FTSE Russell is where to find them. You know where to go to find all these reports and the research and the data and everything else we're talking about throughout the week. CMEgroup.com/TWIFO or /TWIO for our reports. Of course, there's great research from the team over there, Blue and Eric and everybody. Certainly enough stuff to keep you engaged. Educational tab as well. CMEgroup.com is the place to go. And on behalf of our friends over there at CME and Mr. Smith and everybody over there at FTSE Land, and of course Matt and everybody over there at ORATS Land, and of course myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in questions, for reviewing us on your favorite platforms. We love all of you. Keep it coming. We'll be back noon Central, 1 p.m. Eastern tomorrow for our live volatility views. If you're listening live, you want some more stuff in your ear holes, maybe we'll put some fun extra credit live streams up there for you so you can catch up on some of the shows you may have missed throughout the week. Of course, you subscribe to our network on all the major podcast platforms so you don't miss a thing. And we'll be back again tomorrow for Vol Views and back again next Thursday for another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.